Hello, everyone. My name is Madhur Duggar. I am a MSP-focused M&A advisor that work for Exenio Advisors. You can reach us at www.exenio.com, or you can contact me at 212-731-4230. I want to talk today about why I think this is about as good a time as you're going to find to sell an MSP if you are the founder or owner of an MSP in the $2 million to $5 million revenue range. We are in January of 2025. And I think there are four compelling arguments. Some of them are numerical, quantitative arguments. Some of them are more strategic, but here they are. A, markets in general are at a peak, and I'll explain why I think that's the case. But if markets are at a peak and public market multiples eventually determine private market multiples, then that suggests that this is a great time to consider exiting. Two, we have had phenomenal growth in the post-COVID period, and the tailwinds are still with us, but those tailwinds are beginning to slow. We're seeing evidence of it. I'm seeing it in my data, and I'm also seeing it in the data that other industry participants are looking at. And going forward, I actually think that the number of small and medium-sized businesses per MSP is going to decline. Three, the AI revolution is going to fundamentally change the way in which clients are willing to perceive the value of an MSP. It's not going to be about technology. It's going to be about strategic advice. And those MSPs who are able to provide strategic advice to their clients around how to incorporate AI in their world are going to succeed, and the others are going to get competed out. Unfortunately, this is something that plays to the advantage of MSPs who have scale. I'll explain that in some detail. And finally, the numbers. There are simply too many of you, and there aren't enough buyers. And what that's going to mean is at some stage, there will be a mad rush to exit. And that is not a great recipe for getting a good multiple. Things are strong today, sell now. Let's look at some of these arguments in a little bit more detail. Why do I think that markets are at a peak? Here's why. Over the last 5 years since COVID, the S&P has rallied 80%. The NASDAQ has rallied 115%. A lot of the good news has already gotten priced in. The Fed has started to lower rates. We have a Republican House, a Republican Senate, a Republican president, and a conservative Supreme Court. Everything that is business friendly, but it has already been priced in. Markets have already incorporated that information. And therefore, what is at risk here, what is at stake here is that further good news is not going to result in further rallies in the stock market. And in fact, we're already seeing some evidence around that. On the 10th of February, a very interesting thing happened. The Bureau of Labor Statistics announced a very strong job growth number. 265,000 jobs got created. The markets were expecting only 155,000 jobs. Furthermore, this job growth creation was broad-based. It was not just in healthcare. It was not just in government. It was actually in retail, hoteling, leisure, and entertainment, all signs that the consumer is still willing to spend. Interestingly enough, both the S&P and the Dow sold off by 1.5 points on that day. Now, that's not a big sell-off, but the point is that they sold off. And why did they sell off? When I speak with industry participants who are on the stock market side, they say, what got priced in was the risk the Fed might not lower rates as soon as they are expected to, and in fact might even raise rates. We are seeing this in the data. Markets' expectations for lower rates have come down. You also see it in the Fed's committee meeting notes, where more and more Fed committee members are expecting a slower decline in rates. Slower declines in rates mean higher discount rates. Higher discount rates mean lower valuations. More importantly, higher rates will put pressure on the margins of companies that private equities have bought, delaying the time that they take to take these companies to market, blocking up capital that they have to invest in new companies, right? So What does this mean? It means that we are probably going to be in for a period when the economy looks strong, but the markets don't rally as much as we've seen them rally. And in fact, they might be quite volatile. And the problem with volatility is that it creates a wedge between buyers and sellers. Buyers quickly ratchet down the multiple at which they're willing to buy. Sellers continue to want to hold off and sell at the earlier multiple, which are no longer available. And it takes a while to clear that market. We saw this in 2022, and I think we're in for another round of it in 2025. Let's move on to growth and why I think growth is going to slow. First of all, secular tailwinds in this sector are strong. All the reasons for why people thought IT growth is going to be strong in the years to come are still there, but the pace has slowed down, and that is inevitable. COVID saw a huge burst in demand for IT. There was the work from home movement, which resulted in the demand for IT that would support work from home. There was the maturation of cloud technology that resulted in cloud migration. There was also the secular transition of businesses from older generation to newer generation. You wanted to do things on the cloud and was very comfortable with that. And that resulted in a huge demand. And so for a few years, we saw high teen growth rates in top line, right? But I am beginning to see that growth rate slow down. And that when I talk to folks in the industry, for example, I spoke with Peter Kujawa at Service Leadership. He also thinks that growth is going to normalize to a 10% type rate from the 15 to 20% that we're seeing. I'm talking about top line growth here. Now, this is what is interesting. If I look at the growth for small and medium-sized businesses, right, the percentage of small and medium-sized businesses that are growing at 10% or more headcount is 15%. So 15% of the small and medium-sized business universe is growing their headcount at 10% or more. 30% of managed service providers, right, are growing their headcount at 10% or more. Why is that important? That says that right now, managed service providers are growing at a rate that is faster than the target market. And that means that over time, if we give it a few years, you're going to find that there are more MSPs per competing for the same business. Put differently, the number of small, medium-sized businesses per MSP is going to start coming down, which is going to put pressure on pricing because it's going to increase competition, right? So if you feel competitive forces are strong right now, I think they're only going to get stronger going forward. Number three, this is a strategic point. The point is AI is going to create tremendous opportunity for MSPs who can play an advisory role for their clients. Think about a healthcare client that wants to understand how to use AI. They are looking for advice from an MSP who can tell them which technologies to incorporate into their business model to best help them, be it with their ERM, be it with their customer experience, be it with automation in their back office. But to do that, the MSP has to have expertise in the healthcare sector and has to know what the latest technologies around AI are in the healthcare sector. So the healthcare client is not just looking for their day-to-day maintenance work. They are now looking for advice on how to grow their business with AI. And if you are not up to speed on that learning curve, then you have to get up to speed very quickly. Now, how can you do this? Well, you can always recruit people, right, who have this expertise. But we know that these people are going to be very widely bid. And to attract good talent into a small company is going to be a hard job, especially when larger companies are looking for that same talent. You might say, well, I can educate and train the existing staff that I have. Yes, you can. You can send them to conferences. You can enlist them on courses. You can, over time, expect that they will develop expertise by working on projects. This will take time. It will take money. And here's the killer. After you educate them and train them, they might very well leave and go for the next big opportunity because they know that ultimately their career growth path is going to be better served at a bigger organization. Now, that doesn't mean there aren't people who like to stay in a smaller organization and continue to have a lifestyle that they enjoy. But attrition is going to be a key problem for those employees who are educating themselves on the hottest trend, right? So this advisory role is really going to play to the advantage of those MSPs who have built scale, who can provide advisory services in AI across a wide spectrum of areas. I was talking to a gentleman named Nelson Gomes from the Portalia Group, who has a long history of expertise in the healthcare sector, and he said that in his opinion, the number of MSPs who have scale and true expertise in the healthcare sector are of the order of 100, right? Just 100 MSPs. Those are big MSPs who have expertise and clients in the healthcare sector. That means that there are 2 such MSPs per state, right? And I think that just shows you how high the hurdle is to build expertise in a complex area. The final thing I want to talk about is just the sheer numbers, the number of sellers versus the number of buyers who are in that $2 to $5 million revenue range. There are 60,000 MSPs in the US. 10% have more than 10 people in them, right? So we're down to 6,000. 75% of that 6,000 have between 10 and 25 employees. So if you do the math, that's going to work out to 4,500 MSPs that have between 10 to 25 employees. These are the MSPs who have between $2 to $5 million in revenue. Now, who are the likely buyers for these MSPs? If I cast my eye around who the buyers are that are executing roll-up strategies, I would say at this point, there are no more than 50 serious buyers in the marketplace, right? Okay, and most of these buyers, not all of them, but most of these buyers are actually looking to buy assets that have $500,000 of EBITDA to $1 million of EBITDA, $2 million of EBITDA. They are not looking to buy $2 million, $3 million, $4 million, $5 million revenue companies. But let's say for a second that they do agree to start doing this, right? That would mean that each of these buyers, on average, is going to have to buy 90 MSPs in that 10 to 25 employee range, 90 MSPs. Let's assume that each of these buyers integrates 10 transactions per year, which is a very brisk pace, right? That means that it's going to take each of these buyers on average 9 years to process these transactions. So clearly they can't be doing this in the next 2 to 3 years, right? But here's the real killer. Remember those 60,000 MSPs, right? And I said that 6,000 MSPs had 10 to 25. Well, let's go back and look at those 55,000 MSPs who did not have 10 employees. Those MSPs are also growing, right? And in 5 years' time, at a 15% growth rate, those MSPs are now going to have more than $2 million in revenue, more than $3 million in revenue. Now imagine the marketplace in 5 years' time. You think that the buyers are already inundated trying to process the transactions that they already have in place? Well, guess what? Another 50,000 are coming their way in 5 years. So no buyer is going to really seriously look at your company on a one-by-one basis. It just doesn't make sense. What they're going to implement is a program. In that program, if you satisfy their criteria, you're in. If you don't, you're out. If you're in, there is a standard multiple at which the transaction gets processed. That standard multiple is going to have to be an average type of multiple for a company that fits your profile. You cannot expect to get a premium multiple in that sort of a programmatic approach. To get a premium multiple, that person has to spend time with you and understand your business carefully, but there is no time to do that. And therefore, this is the best time to sell. So if you find these arguments compelling, if you want to debate these arguments, because I'm always interested in understanding where the holes are, please call me. My phone number is 212-731-4230. My name is Madhur Duggar. I focus on MSP M&A, and I work for Excedio Advisors. Thank you very much.